There's a second chance happening right now. This is where future fortunes are built. While everyone else is running for the hills, running from Bitcoin, and allowing fear to dictate their decisions, a rare opportunity is quietly presenting itself. Right now, the fear and greed index is flashing red. Fear is dominating the market. Uncertainty is everywhere. Negative headlines are spreading. People are questioning their convictions. But if you've been around Bitcoin long enough, you know this is nothing new. Throughout Bitcoin's history, the greatest opportunities have always appeared when fear was at its highest, when confidence disappears, when the crowd becomes convinced that the story is over. That is usually when the next chapter is just beginning. Personally, I don't believe anything is going to stop Bitcoin. Now, that doesn't mean I view Bitcoin the same way most people do. In fact, I know this next part may be controversial. Many people believe Bitcoin was created by some anonymous genius operating completely outside the system. Maybe that's true. But personally, I'm not entirely convinced. I sometimes wonder if Bitcoin was introduced into a system that already understood exactly what it could become. Because when you zoom out, the timing is hard to ignore. Bitcoin emerged in October 2008, right in the middle of the global financial crisis, a moment when trust in banks was collapsing, when governments were bailing out financial institutions that were supposedly too big to fail, when people were waking up to the fragility of the entire monetary system. And right there, in the middle of that breakdown, a new form of digital money appears. Maybe that's coincidence. Maybe it isn't. Either way, the timing is fascinating. Since then, we've watched crypto go through massive booms and brutal crashes, entire fortunes created and destroyed in cycles of extreme emotion. And yet, despite the volatility, crypto has become one of the only markets where younger generations still feel like they have a shot at financial upward mobility. Because look around at the world they're stepping into. Housing prices keep rising. Cost of living keeps rising. Savings lose purchasing power year after year. Traditional assets feel increasingly out of reach. Meanwhile, central banks can expand the money supply at will, creating trillions out of thin air through debt expansion and liquidity injections. So naturally, people start looking elsewhere. But here's where things get more interesting. If you step back and watch these markets long enough, you start noticing something unusual. It doesn't always feel like pure randomness. It feels structured, not necessarily controlled by a single group pulling every lever, but shaped by incentives at the highest levels of the system in ways most people never think about. Because if you wanted to accumulate a massive position in something like Bitcoin or high-quality crypto assets, you wouldn't do it when everyone is euphoric and prices are running higher. You would want the opposite environment. You would want fear. You would want uncertainty. You would want headlines pushing people out of positions. Because that is when liquidity disappears. And when liquidity disappears, assets transfer from weak hands to strong hands. And once you see that pattern, you can't unsee it. Narratives in this space swing violently. One cycle, it's Bitcoin is the future of money. The next cycle, it's Bitcoin is dead, it's a scam, it's going to zero. Yet underneath all of that noise, something else keeps happening. Infrastructure keeps building. Custody expands. Institutional access increases. Financial products continue to launch. Even through deep drawdowns, the system around crypto doesn't disappear, it grows. So you have to ask a different kind of question. If something is truly collapsing, why does the infrastructure around it keep expanding? Now, I'm not saying there is a single coordinated force controlling every move in the market. But I am saying this. Markets tend to reward those who understand how fear, liquidity, and narrative interact. And sometimes, from the outside, those interactions don't feel random. They feel timed. Almost like fear shows up when liquidity is most useful. Almost like optimism returns when distribution becomes convenient. Maybe that's not conspiracy. Maybe that's just how complex systems behave when incentives are stacked at scale. But what is undeniable is what happens during these phases. People don't just sell. They capitulate. They abandon positions they once believed in. They exit early, emotionally, and permanently. And every time that happens in financial history, the same mechanism is at work underneath. One side is forced out. The other side absorbs supply. That is not theory. That is structure. And crypto is no different. It moves in liquidity cycles. It moves in sentiment cycles. It moves in fear and greed cycles. When interest rates were near zero and liquidity flooded the system, crypto exploded higher, tech stocks exploded higher, real estate exploded higher. Almost everything went up. Why? Because cheap money encourages risk-taking, and all that funny money has to go somewhere. But when liquidity tightens and rates rise, the entire structure reverses. Risk assets fall. Speculation dries up, and crypto gets hit just as hard as everything else. That tells me crypto is not separate from the system. It is deeply connected to the same debt cycles and liquidity cycles that drive global markets. And that's why I believe powerful institutions will continue to shape, influence, and participate in this space for years to come. There will be pumps. There will be crashes. There will be fear. There will be euphoria. And throughout it all, the strongest hands will continue accumulating, while emotional participants move in and out. But despite all of that, Bitcoin is still something different. Because Bitcoin is not just a trade. It's not just something you buy to try to make more dollars. Bitcoin represents something much bigger. It was created as an opt-out, an escape hatch, a decentralized monetary system outside the direct control of governments and central banks. And when you take it seriously, when you move it into self-custody and start thinking in decades instead of days, your entire perspective changes. You stop reacting to every price move. You stop obsessing over volatility. You zoom out. You start studying the system being built around it, and you begin to see something larger forming. A shift toward digital ownership, digital property, and decentralized financial networks. Which leads to an uncomfortable question most people avoid. Are cryptocurrencies really currencies? Because very few people actually use Bitcoin to buy coffee. Most people hold it because they believe it preserves or increases purchasing power over time. That makes it behave less like currency and more like money, more like digital property, more like digital gold. Gold and silver served that role for thousands of years. Bitcoin may simply be the digital evolution of that same concept. And maybe that's why ownership itself feels like it's changing in the modern world. Now, none of this means prices only go up. Bitcoin has gone through brutal corrections before, and it will likely go through them again. But history shows something consistent. Every major correction shakes out weak hands and transfers ownership to stronger hands. That's why I believe many people running for the exits today may one day regret it. Not because Bitcoin is guaranteed to succeed. Nothing is guaranteed. But because fear has a way of forcing people out of long-term opportunities at exactly the wrong moment. As Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." And while I don't agree with everything Buffett says, especially about Bitcoin, that principle has stood the test of time. Wealth is often built by doing the opposite of the crowd. Staying calm when others panic, staying patient when others rush, accumulating when nobody wants exposure. That's why my approach is simple. This is not financial advice. I watch liquidity. I watch interest rates. I watch sentiment, because historically, some of the best opportunities appear when interest rates are high, sentiment is terrible, and everyone is convinced the asset is finished. Then eventually, the cycle turns. Liquidity returns. New money flows into the system. Risk appetite comes back. And crypto often responds violently upward. The public returns. The headlines turn bullish. Everyone wants it again. And when that happens, I would rather be gradually exiting than chasing the final stage of euphoria. In other words, I try to do the uncomfortable thing. Accumulate when fear dominates. Stay patient when uncertainty rules. And step back when everyone suddenly feels like a genius again. Because that is where fortunes are made. Not in certainty. Not in hype. But in moments where conviction is tested. And right now, conviction is being tested. To some, this looks like chaos. But to others, this may be the second chance they didn't realize they were waiting for. This is not financial advice, but if you have the means to buy Bitcoin and even some of the other crypto assets, then you may want to consider doing as I will be doing this summer. I will be buying while there is blood in the streets. When I see red, I buy and wait for the controllers of the system to pump it to the market to the moon.